Welcome back. Well, results of the SACCI Business Confidence Index for May this year were released just a short while ago. And joining us now so we can get into the detail is Richard Downing. He's economist at SACCI. Thanks so much, Richard, for joining us this afternoon.
Pleasure, Lisa.
Well, the BCI decreasing by 2.2 index points. Some would say surprising given that we've got the Soccer World Cup just around the corner. We've seen growth ticking higher as well. Inflation lower into the central bank's target range. So surprising for you? I mean, what have been the pressure points here?
Well, not surprising if you given all the developments in Europe, especially. I mean, denting sort of confidence in Europe and in the world economy to some extent, and actually it might also affect, you know, some of the fast-growing economies like China, because where do you go with your products in the end? So that is a sort of questions that's raised, and the public sector that's actually experiencing serious, you know, financial problems there, and the economies actually that has to go through quite some adjustments, you know. So this is not a short-term sort of solution to this. It'll take some while for that to settle. And then, of course, South Africa, I mean, we had the strikes in a very sensitive sector, a sector that's actually linked to all other sectors in terms of production. And that had quite a negative effect for 3 weeks. I mean, the guys who work there that can go on holiday for 3 weeks is already admirable, but still, you know, the effect on all the other sectors in the economy is worrying.
Okay, well, let's hone in on that local factor there. I mean, it seems like with that, the country is still being dogged by debate on the economic model that's to persist here. I mean, to what extent has the spate of labour demands that we've seen for wage rates well in excess of inflation started to fuel this concern once again?
Well, I think that's a worrying factor, you know, cost to business. I mean, in profitability of business, investment sort of confidence. We're talking business confidence, but what is of much more importance is investor confidence. And I think, you know, with this sort of pressure all the time, continuously coming through, you know, and with a sort of ideological slant also to it sometimes, this is a bit worrying. I mean, and I don't think we need a luxury of this type of debate at this moment, given the sort of fragile situation as our economy is in. And we're making the point this time, the World Cup, the positiveness of this, might only just cover, you know, this negative effects that we're seeing at the moment, so that your second quarter growth might not be as high as we would like to see it. We are expecting something in the vicinity of 3%. But with these things going on, and remember, during the World Cup event, there's some production coming to a standstill, and we hope it's not widespread, but construction, for instance, on the roads and things. And that is negative on GDP. So the one is a very good gain, the other one there's some negative balances, and so the net effect will be the important one. Looking
at the net effects and the balancing and, you know, the good and the bad of the World Cup actually coming to South Africa, I mean, what's your view on the threats of labour unrest actually persisting in the country? Because to a large extent, the labour unrest that we have seen has said to have been as a result of people just timing this, just opportune timing ahead of the World Cup.
That might be the case, and that's very unfortunate to do it that way. I mean, because, I mean, we now have a sort of window of opportunity, and we're drawing the curtains on that window to some extent. Or we look into this window and see all kinds of things we don't want to see. And this is what this sort of timing is doing to this. And I mean, it's not a good time actually for the economy where it's actually struggling to get out of the recession. The GDP levels is not even back to the second quarter 2008 levels. So we still have a long way to go, and now we're demanding sort of, in terms of labour, with business under stress already, this sort of exorbitant sort of wage increases, as you've mentioned. This inflation figure that we see might not last long.
Exactly.
You see that type of thing.
Bringing us to the point that we have got four categories or four sub-indices managing to hold on to a positive note here, and one of them has been inflation itself. But there is then a risk of that moving into negative territory moving forward.
Well, definitely. I mean, we saw the rand also being quite volatile during May and actually losing some value and weakness there, which is also fueling inflation to some extent. So one is worrying about that fact. If you look at manufacturing, which has had quite a good figure up to March, But 26% of manufacturing activity is still in negative territory. So there also, you know, there's still a lot of work to be done. And the South African economy's survival can't depend on, you know, domestic sort of consumer expenditure, because we know that's under severe pressure. So what we had is actually investment spending going on, and then of course the international sort of economy picking up, and that is under pressure. So we must be very careful here to take, not to sort of distort the whole process of recovery that we're busy with at the moment.
Let's take it to the global playing field here. I mean, financial market developments on the back of global uncertainty at this stage may tarnish economic growth prospects as we move further into this year. I mean, how's that global uncertainty actually weighing on our own confidence levels at the moment? To what extent?
Well, I mean, South Africa is a very open economy. We all know that in terms of imports, in terms of exports, and in the month of April, exports and imports actually. Imports showing you that the domestic demand is still very sort of down and out, and exports showing you that the world economy isn't really there in terms of the demand we need, and I'm talking real sort of trade figures. And we moved back into a deficit there, although the deficit is not that big. But the driving forces that we need for the economy to get out of this recession is a bit dicey at the moment. Yeah. So, and that is where actually we can't do anything about the international sort of economy. But the US, it seems like, is going a bit better than Europe and so on. But Europe is a very important trade partner to South Africa. Therefore, I mean, what happens in Europe is very important for South Africa, especially in terms of exports.
So what's your outlook then moving forward in terms of business confidence as we progress, given that the picture is just so uncertain and so volatile at this stage?
Yeah. Well, we hope this opportunism, as you've called it, in terms of, you know, labor strikes and all that, will sort of fade out a bit. I mean, because we can't actually accommodate that at that moment, and one doesn't want to say this is wrong or right, but I mean, to have a 15% demand in a 4%, 5% inflation environment is absurd to say the least. So, but there's some other issues that also might be there, but I think the South African economy must realize can carry only this size of remuneration for employers. Yeah. And so if you actually be moving in nominal terms beyond inflation, there will be job losses, which is already the case. And the fact that the GDP might not respond as we wish it to respond, there might not also be job creation as we need. So it's a two-way sword that we're trying to grab with our bare hands.